May 15th, 2025. Today was a bull trend for the vast majority, or for I guess for the first, really 29 bars of the day, and then the market transitioned into a trading range. You have to remember that when you get a spike pullback channel, the channel is the start of the trading range. It's the low of the trading range. So the market gives you the information as to where the low of the trading range is likely to be during bar 29. So, or you could argue with these bear bars, the low was 36. I saw it as 29 personally, but I could see why you would argue 36 low is the low of the trading range. So that's why, obviously, in this area, you would have to be very careful with selling. The 3-bar micro channel had a pretty good day. 8 out of 9 signals were successful. The only failure was 33 through 35. Obviously, as I've mentioned, my definition of success is a symmetrical second leg before a 150% retracement of the signal. So initially, not much to do in the tight trading range. I bought the close of 7. 8 was a disappointing bar. I was hoping that we were going to get, obviously something a little less disappointing. I'm expecting a pullback, 52% of the time, an immediate pullback. But when I get 8, it closes stronger than I want. What does that mean? That means that 8 is likely going to get a second leg sideways to down. Still thought it was completely fine to hold the trade, but just expecting a second leg sideways to down. 9, 10, and 11 is another 3-bar micro channel. It's the second leg and a lot of, 2 doji bars essentially, so not quite as good. But 7, a good enough bar to buy, and then I scaled in during 8 and 9. I held 12 and 13 tells me we're probably going to get one more leg sideways to down before we go higher. So 14, 15, good for the bulls, but I'm still expecting one more leg from 12 and 13. They're really strong bars. 16 and the tail on 17 that touched the close of 13 is what basically gave me the expectation that we were going to get, or the expectation that we were going to start to go higher. So at the end of the day, 8 just became a complex pullback. 1, pullback. 2, pullback. 3. So if you sold below 8, you have to be expecting a couple of legs down. So if you sold, either you scalped out during 9 for, 5, 6 points, that would be okay. Or you scaled in higher and then scalped out 12, 13, something like that. Or at the worst, you scaled in during maybe 14 or 15. Or sorry, you scaled in and then you got out maybe above 14 or maybe on the close of 15 or something along those lines. If you sold below 8 and you exited above 9, you should not be swing trading because it's going to take you 7 years to figure that out because that's a very beginner thing to do. As far as after that, 17, 18, and 19 is a very high probability trade. Gave it 85% or 85% chance that we end up getting a symmetrical second leg. And when I get something that's that high of probability, I trade larger. I know that the risk is larger because it's a giant signal, but I don't really care because the probability is so high. So I'm not really bothered by the fact that the signal is really large and that my risk is large because I know that the odds of me losing the trade are very low. So I usually, when I get a really, really strong signal, this is, there's a kind of backwards mentality a lot of people have in trading where they think to themselves, well, I'll take the low probability trade with a really large size. And when I do that, my winners will be huge. But what you're not accounting for, you're not going to do it properly. And I'll prove it to you because what happens is you'll take the sell, let's say you're taking just a bunch of 20% trades, right? Say you just, they're not all 20%. Something like, 28 is probably 20%. But let's say you're just selling every single bear bar with a stop above it. By the time that you get over to the one that ends up working, you've sold 4 or 5 times and taken full losses. And if you're trading larger, those 4 or 5 times are going to add up to be a pretty large loss. And you don't want to keep taking low probability trades and keep losing them because it just sucks. I've done it before where you trade large on the low probability trades and then you just end up getting, you end up getting screwed. So if you're going to, trade large with something, trade large on the high probability trade. Something like 17, 18, 19 has a very high probability of getting a symmetrical second leg. So buy the close with a larger position size. And that is what I did. I took my initial buy the close and I bought my first scale in as well on the close of bar 19 because I thought that there was a high probability that we go higher. So I bought the close of 7. I got my symmetrical second leg to here. And then I re-entered on the close of 19. I'll just go over my trades now. And I got 1R, so I exited there. And then I re-entered on the close of 23, and I bought more below. And I exited there. This isn't exact, but I exited in this area. I did not take 33. I thought it was later. I took 40, and I exited on the close of 40. It did end up working, but I just exited on the close of 43. I did not take 47. I did take 59 or 61, and I ended up exiting during 68. So I had a pretty good day. But anyways, 16, 17, and 18 is going to need another leg up, and we get it. 21, 22, 23. We're around yesterday's high, but we have a 7-bar micro channel, 17 through 23. So the first reversal is going to fail. There's going to be buyers below. Just go look at every time you get a 3, 4, 5, 6, whatever bar micro channel, how often the first reversal fails. It's pretty common. And that was one of the issues with this trade over here, was that we had an 8-bar micro channel leading up to it. So I was hesitating to hold long, especially after this, because we were probably going to get back down to the 58 low. Thought we might have to get to the 47 high. That was my reasoning for taking the trade. And obviously, we got the symmetrical second leg before the 150% pullback, so it ended up working. The bell's going to ring in a second, just something to keep in mind. So don't jump if there's a loud ding here in a second. So this should get a third leg. We get a third leg up. Do you sell below 29 or 28? No. If you sold below this and exited above that, or you sold below that, it's going to take you a lot of years to get good at trading. And you should just trade the 3-bar micro channel for a couple of years, and you'll speed up your timeline by like a whole bunch. As far as yes, follow through 29, but not very good. You're trading against this giant tight channel. Look at this on a 15-minute chart. Look what you sold. If you sold for any reason, you sold against that. That's what you sold. Those 4 giant strong bull bars. Odds of this getting a symmetrical second leg are very, very, very high. Probably in the 90+% range. So selling against it doesn't really make any sense. 31, 32, 30, 31, 32. If you're going to make a mistake on a bull trend day, make a mistake going long. Don't make a mistake going short. It's infinitely better to buy the high tick of this than it is to be trying to sell. Why? Because a lot of times if you buy the high tick and you scale in, you're going to be fine. It's just difficult to do and difficult to learn that. You just have to experience it. So I did not take this. I thought it was a third or fourth leg up. So I was hesitant, but I was obviously unwilling to sell. 38, 39, 40, I thought was strong enough that I decided to buy the close on 40. And I bought more basically below 41. And then we got an outside up bar 42 and follow through 43. My target was like right here, and the 44 was stalling. So I just ended up taking it. But it was okay. It would have been fine to hold through it. 44 isn't really a very good short either. 49 is big enough that it needs a second leg. So I think 49 is a reasonable short. It's after a lot of legs up, and it's clear that we're in the channel phase versus in the spike phase taking any of those shorts. So after 3 legs up in a channel, 1, 2, 3, and you get the biggest, best looking bear bar you've gotten so far, this is likely to get a second leg. You could sell it and scale in, but I would personally just leave it alone. But if you sold 49 today and you scaled in, I think that's fine. We got obviously a second leg down with an 8-bar micro channel. So as good as these 3 bull bars are, you have to keep in mind this is probably still going to have some control. And obviously, as I've said, I scaled in. I don't have to exit below 68, but if I'm not going to exit below 68, I should try to get out around break even on 69 or 70. 68 is a big enough bar that it's going to get a third leg down. This is the first leg pullback, second leg pullback, most likely, and then third leg. So it was probably better to just get out and wait for the third leg to happen, and then you can look to buy again. As you can see, if you had bought and scaled in and were patient, it was scary, but you're probably going to be fine. If you had taken that buy, you'd have to profit on all your other buys and back up here. I'm not saying I encourage you to buy here and put a stop down here and just see what happens, but it's a good exercise. I think one of the problems people run into in trading is they try to make money trading. And I know it sounds dumb, but stop trying to make money trading. The best way to make money trading is to stop worrying about your trades and your P&L, or not your trades, but worrying, being so caught up in what you're doing and your P&L and trying to find ways to make money every month. Just stick to something, and you'll eventually, find a way to make money at it. It's basically, the way what I would compare switching, what you're doing. If you're trading in a way where you're trying to swing trade some days, you're trying to scalp some days, you're trying to do this some days, you're trying to do that some days. What you're essentially doing is like trying to get 7 different college degrees all at once. No one does. Very few people do that, and the people who try, most of them can't do it, and it takes forever. However, the person who just focuses on, whatever your degree it is, the 3-bar microchannel degree. I'm focused on getting a degree in the 3-bar microchannel. I want a master's degree in it. I want a PhD just on the 3-bar microchannel. I want to be the person who knows the most in the world about the 3-bar microchannel, because that means I'll be able to trade it the best. I don't need to have all this information on all these tiny little scalps and little things going on, because if it's not within my setup, then it's noise to me. It's not noise to everyone, obviously, but find something you want to do and stick with it, because when you try to switch from swing trading to scalping to this, to that, you're just setting yourself up for failure. Sticking with one thing, you have a much greater chance of learning it. And that's why the comparison of it takes so long, is because if you tried to get 6 college degrees, how long is that going to take you versus getting one? Right? Getting the one is going to be much easier. And it's not easy at all times, right? There's times where the 3-bar microchannel, you get smoked. I've gotten smoked on it a million times before, but you eventually are going to learn. You can't be bad at it forever. But if you're trying to do 6 different things at once, it makes it really difficult. And Al always talks about the movie The Princess Bride, the scene where the guy is drinking the poison and he's saying, well, you put it in 2 cups. And he says, well, what, maybe it's in this cup for this reason, or this for that reason, and going back and forth of all these different reasons. And at the end of the day, that's what happens with traders, is they get too much analysis paralysis versus, people want to feel smart. This is something, you'll notice, is traders want to feel smart, but you don't got to be smart. I had a 2.6 GPA in high school and I dropped out of college. You don't have to be a smart person to figure out how to trade. But anyways, 3-bar microchannel, what do you know? It's obviously a pretty late leg, but there are buyers below. They have an outside up bar. I don't think that this is super sustainable. I think we're probably going to pull back. I don't think we just continue to race up, but we might have to touch 6,000 first. I don't know how much higher this rally is going to go. So as far as being a quote unquote daily chart bull, I'm not overly trusting in what the bulls are doing right now. I think we probably might have to get to 6,000, but as far as being, a bull right now, in the short term, some traders might start to take some profits. The weekly chart, 3 legs up, as I've been saying. I need to save this and get rid of it. And then, not really worth it to go over the monthly chart right now. But all right, that's going to be it for this video.